This is Barry Zalma, Zalma on Insurance, speaking today about Volume 25, Issue 21, the November 1, 2021 issue of Zalma's Insurance Fraud Letter. In the September 1, 2021 issue, the fraud letter starts with an article on the reason for the examination under oath. Courts that construe submission to an EUO as a condition precedent to recovery generally do not require the insurer to prove it suffered actual prejudice from an insured's unexcused refusal to submit to an examination. The EUO provides a mechanism for the insurer to corroborate the claim by obtaining information that is primarily or exclusively within the possession of the insured. The adjuster, the independent adjuster, the Special Investigation Unit or SIU investigator, the independent insurance adjuster, and in complex cases, the attorney retained to represent the insurer questions the person interviewed in a manner similar to a deposition in a legal proceeding. Because of the formality of the proceeding, it includes an oath and the presence of a certified shorthand reporter. The task of establishing rapport with the person interviewed so that relevant information may be obtained from the insured is more difficult than in an informal interview. Unlike legal proceedings, where questions are limited to those seeking a yes or no or brief answer, the EUO, on the other hand, seeks narrative responses from the person questioned. The person taking the EUO, therefore, must be capable of transitioning from lawyer-like questions in litigation to the broad, inquisitive, narrative-seeking questioning. An EUO should never be conducted as if it is an adversarial activity, which is what a deposition is, but merely a fact-seeking activity that is directed to the needs of an insurance policy and the need to prove a loss, whether it is compensable or not. Because the EUO is a tool for gleaning the maximum amount of information, the EUO is an effective weapon against insurance fraud. This is because the person taking the EUO is knowledgeable about insurance fraud and insurance law, while the person being questioned is only aware of the claim presented, and if he's attempting a fraud, the fraud he or she may be attempting. Often, however, the purpose of the EUO is not to stop fraud, but to allow the insured an opportunity to prove his or her claim of loss in cases where evidence has been destroyed by a casualty or is otherwise unavailable. The authority to take an EUO is provided by the insurance contract and exists as a result of statutes establishing a state-mandated fire insurance policy that must be incorporated in every policy in the state that insures against the peril of fire. The article goes on for several paragraphs and pages to allow you to perfectly understand what is involved in the taking of an examination under oath, and that it has multiple purposes, not just as an attempt to avoid fraud. Many examinations under oath that I have taken over the last 54 years resulted in a claim being paid. In addition, the newsletter will speak about a new California mandatory fraud warning where insurance companies in California must note that the requirement to update the mandatory anti-fraud warnings on documents based on the recent signing of AB 1511 that makes application fraud a specific crime in the state of California. Application fraud has been a crime in many states, but until 2021 was not a crime in the state of California. The requirement was publicized in a California Department of Insurance SIU blast sent out in the month of October 2021. The required new language was updated language in bold and follows, quote, "Any person who knowingly presents false or fraudulent information to obtain or amend insurance coverage or to make a claim for payment of a loss is guilty of a crime and may be subject to fines and confinement in state prison." According to the CDI SIU blast, on October 7, 2021, Assembly Bill 1511 was signed into law by Governor Newsom. This bill included Fraud Division initiated language that amended California Insurance Code Section 1871.2 and added new Section 1871.10. AB 1511 was the annual California Department of Insurance cleanup bill. The pertinent changes added to Section 1871.2 of the Insurance Code that reads, "An insurer who, in connection with any insurance application, contract, or provision of contract described in Section 108, prints, reproduces, or furnishes a form to any person upon which that person applies for a policy, seeks to make a change to an existing policy, or gives notice of a claim to the insurer, or makes a claim against the insurer by reason of accident, injury, death, or other noticed or claimed loss, or on a rider attached to the form, shall cause to be printed or displayed in comparative prominence with other contact the statement that I recited earlier." Section 1871.10 was added to the Insurance Code to read, "It is unlawful to make or cause to be made a knowingly false or fraudulent material statement or material representation for the purpose of obtaining or amending an insurance policy under any line of insurance regulated by the department." So in essence, it is now a crime in California to lie on an application for insurance, to misrepresent or conceal a material fact on an application, which can result in a fine not to exceed $10,000 or by imprisonment in a state prison or county jail not to exceed 1 year, or by both that fine and imprisonment. SIU investigators must now be aware of this new crime and always, when conducting the investigation, verify the truth of the matters of fact set forth in the application for insurance. And if a false statement is detected, then the SIU or the claims person must report the suspicion of insurance fraud to the California Department of Insurance under the regulations that have been enacted to enforce the California Insurance Frauds Protection Act. In another article, it turns out that the state of Georgia is required to pay $870,000 to a whistleblower who was fired by the ex-commissioner of insurance, Mr. Beck, because the whistleblower provided the information that eventually resulted in Jim Beck being accused, tried, and convicted in the Georgia Superior Courts. The newsletter goes on to publish conviction reports from the Coalition Against Insurance Fraud and a new article on who pays for False Claims Act actions, where some courts are requiring insurance companies to pay the damages the Department of Justice seems to acquire from medical providers who are defrauding the U.S. government and its Medicare and Medicaid provisions. In addition, we publish health insurance fraud convictions for the last 2 weeks, which apparently are getting larger now that the COVID pandemic is slowing down. And we also publish a list of other insurance fraud convictions and discuss the free insurance videos that I produce and publish at rumble.com and on YouTube, so that it is available to you, and short discussions on some of my books about insurance claims and insurance fraud. This video was adapted from the November 1, 2021 issue of Zalma's Insurance Fraud Letter, which is available for you free on the internet, with the links set forth in the blog that attaches this video. Thank you for your attention.